All right. Hello, 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 everyone. Thank you so much for joining us. I'm Rosalind Brown of Your Wealth Guidance, where we help Black women on their journey towards financial independence and creating your roadmap so you can live your life on your own terms. And so today, this is the perfect time of year because I know most of y'all are probably sitting around like, either you pulling together documents. I had someone reach out and they said this was perfect timing. So I think she probably like, should I start my business or maybe not? And so if that's the case, hope you about ready. So today we have Ashley McCoy. She has over 20 years of banking experience and over 15 years working with small to medium enterprises. She currently serves as an accounting, small business management, and marketing professor and is the CEO and the business expert of the Brand New You, a marketing consulting and accounting company that specializes in providing financially feasible business and marketing solutions to business owners and focuses on assisting entrepreneurs to start, develop, and grow their business the right way. Key, the right way. And so, Ashley, I guess the biggest thing is what are some of the trends or things that you're seeing that aren't the right way?
Well, of course, I see a lot on TikTok, and especially when it comes to purchasing vehicles and understanding depreciation and even understanding mileage. A lot of times people say, well, I'm going to purchase this 6,000 pound vehicle because I read about it on TikTok. So all of what I'm purchasing is going to be tax deductible. And I said, caveat to it, yes. I said, but think about it from a holistic standpoint as an entrepreneur. Is that something that you really want to do? Do you really want to depreciate $100,000 vehicle all at once? Because there's some other factors that have to go into that. Did the company make over $100,000 where you can actually feel the benefit of that? Or did you just start the company? What does that look like? So there are a lot of things I hear when it comes to TikTok. Other things as it relates to mileage, understanding mileage and depreciation, understanding that if you're depreciating a vehicle, you can't do the mileage. So, kind of deciding where you are, and also understanding even purchasing vehicles, lands, and things, land and things of that nature. It just doesn't have to be a vehicle that you're purchasing that you can depreciate. There are other things. You may have a nice piece of equipment that you want to know about depreciating, especially when you are starting your business. So those are some of the things I hear. The other thing is a lot of people don't know about bookkeeping. They feel like it's a waste of time. They feel like, well, I can go to QuickBooks and do it myself. I'm like, but are you doing this yourself? Do you understand what you're doing? So some of those things we want to kind of talk about. Sales tax. I'm starting to run into sales tax lately because if you have some type of retail store or you're wholesaling, you may not think about sales tax. So the mileage, depreciation, sales tax, um, and then just kind of understanding the difference between contractors and employees. And I'll hear people say, "Well, I'm unemployed, but I'm a contractor." No, you can't be both. It's one or the other. And the biggest thing, Rosin, is paying yourself. That's one that you want to start doing is being in a position to pay yourself. So, yeah, so that's kind of where we are. I don't know if you want me to kind of go through some of the things that I kind of had planned or.
Yeah, jump
Okay.
on into it.
Okay, so the first thing that I wanted to talk about is taxes, understanding taxes as the employer, because now you're transitioning from employee to employer. And so, oftentimes, when we're setting up and onboarding a company from bookkeeping and payroll perspective, they don't understand as the employer, why am I paying taxes? They may be their only employee and they say, well, give you an example. They're paying themselves $2,000 for that particular month. And when they're paying themselves $2,000 for that particular month, the thing that they can't wrap their head around is I'm paying myself $2,000 and taxes have been taken out. So why am I paying for taxes as the employer? And I said, as the employer, you're responsible for certain things such as unemployment tax and withholding tax. I said, so just as you worked for a company and you worked for the company and that company was responsible for paying employee tax, unemployment tax and state taxes, the same thing will apply to you and your company as well. So that's the biggest piece that kind of throw them off. I said, well, you hear people all the time talking about quarterly. Oh, I'm paying taxes on a quarterly basis. I said, that is usually associated with payroll and having employees. So from that perspective, when you are paying yourself, yes, you're paying, taxes are coming out as the employee. As the employer, the employer, the company will pay its taxes. It will pay unemployment tax. It will pay withholding taxes, and it will pay the federal taxes. The benefit as an employee is, as everyone know, when people are doing PPP and all this, and or they were filing for unemployment, and a lot of self-employed borrowers say, "Well, I'm not able to get unemployment." But if you are self-employed and you actually pay yourself from your company, anything happens to your company or you're in a position you cannot work, you are able to file unemployment. And also it helps you in situations to balance out those tax liabilities when you're trying to purchase homes, when you're trying to purchase investment properties and things of that nature, because now you actually have a paper trail of showing individual W-2 income for yourself. And then if you're concerned at the end of the year, wow, I got a $50,000 tax bill. Think about if you actually paid yourself a fraction of that and had taxes paid out. Now you don't have to worry about having a $50,000 tax bill at the end of the year. So that would be the first thing that that we want to address is paying yourself. That is a big one. The first thing we address is operating as the employer. Transition your mindset that I'm now an employer. Because the thing is, when I talk to clients, I'm setting you up for growth. So when I'm setting you up to pay yourself, I'm setting you up with the idea that, hey, I'm not going to just be a one person operation. I'm going to hire an employee. So now that you have things in place, you're able to bring that employee on. You understand that if you're bringing an employee on, you're taking liability for this employee. So if this employee quits, there's unemployment. You're paying certain benefits for this employee, such as direct deposit. That employee, the difference, going into the next topic, that employee, basically you can tell them, this is what I want you to do. This is the time frame I want you to do it. This is how I want you to do it. So employee is basically of your company under your guidelines. That's why if they leave, you're responsible for taxes and things of that nature on this employee. That's why you have employees don't have as much liberty as an independent contractor. So your independent contractor, which we know as a 1099, is simply what it is, an independent contractor, someone that you have paid to do a service related to your business. They may do some of the same things that employees do, but as far as guidelines, you can't mandate necessarily the time frame they do them. You can't mandate how they do it. You can give guidelines, but that independent contractor is going to fall under their own entity. That's why a 1099 employee, the 1099 contract at the end of the year will file a business return because they are able to write off all of the things that you didn't provide to them, mileage, food, everything that was associated with them doing this service that they did for your particular company. So understanding the difference with an employee and an independent contractor. Independent contractor is simply that. They're not an employee. They say, well, he's an employee. No, they're an independent contractor. You give them terms, agreement, things like that. There's no set agreement. There may be a contract involved, but that independent contractor is getting a 1099 at the end of the year. You don't pay taxes for them. Employee is getting a W-2. So ideally, I tell people if you're starting, you may be your only employee, and then you may have a 1099 contractor that you're bringing on because it may be an assignment. When that assignment is over, then we know that you may not need them for that time frame and you may bring them back. So just kind of clearing up some of the misconceptions as it relates to employees and independent contractors or your W-2s and your 1099s. So those are some of the things you think about when you're starting your business. And then, segue into paying yourself. I have so many entrepreneurs that say, I don't pay myself. I'm just taking money from the company. And I'm like, that is called a drawing or a withdrawal. And a withdrawal is you're taking money out for personal use. A wage is money you've earned for this company. So if you're actually paying yourself a wage, it's going to be in the form of payroll. Even if you don't have a direct deposit or anything set in place, you're going to have wages. I'm going to pay myself every month, every other week. But a lot of entrepreneurs neglect to pay themselves. Factor that into your cash flow, because what happens, you start taking money out when you need it. And now you're not managing cash flow. You don't know how much the business needs now. You don't know where the business is going because you're taking out to pay your personal mortgage. You're taking out to buy groceries, things like that, because you're saying, well, I'm not paying myself. Technically, you are. In order to manage that cash flow, set something realistic. I'm going to pay myself $2,000 a month. Operate off that $2,000 a month that you're paying yourself. If you need to take something out, take it out as a drawing, but ideally, those funds are supposed to come back in as it relates to revenues, things of that nature. Did you have any questions so far?
Yeah, I was gonna say because I think some people are thinking, yes, I am paying myself. I'm taking these draws whenever
Mm-hmm.
the company has extra money. But how would you equate the difference between just the kind of traditional draw versus actual income from the business?
Well, the thing is, I always take the thought process of a nonprofit. A nonprofit operates a little different. Nonprofit sets budgets. So at the beginning of the year, set a realistic amount that you know you can pay yourself. You can always change it, but if you know typically at the end of the day, end of the month, I have $1,000 left. Pay yourself at the end of the month. Do payroll for yourself at the end of the month. That way, everybody's taken care of, independent contractors, your suppliers, vendors, everyone's taking bills are paid. So that way you get in the habit of saying, I am paying myself $1,000 every month. If you're taking other funds out, yes, it's going to happen, especially with your smaller businesses because they haven't gotten a grip on cash flow. But it will be so beneficial if you set say I'm going to do $1,000 for the first 6 months. I can do that because then you'll start forecasting, you'll start planning for it, and then getting that W-2 or getting that direct deposit, it makes you feel warm and cozy on the inside because you feel like I'm doing something right for my business.
And you just brought up a good word, the forecasting word. And I know you have decades of experience in banking. And so a lot of people are like, all right, I'm starting my business. I want all these lines of credit. I don't want to have to guarantee all those kind of things. But that forecasting part is where, you know, I I saw you only made $1,000 last year.
Mm-hmm.
But that forecasting is how you tell someone what you anticipate doing or what's coming up in the future, even if it's investors.
You're right, and it's in the terms of um, accounting, you're thinking about even if you're saying, well, I want to just lease this business. Everything is about at least this building. Everything is about forecasting because they're asking for a performance statement. Performance statement is going to be performance financial statement is going to be different from your P&L. And for those that don't know, a P&L is your income statement. P&L is your profit and loss. P&L is revenues minus expenses. If you're left with a loss, it's net loss. If you're left with money, it's net income. But it's simply revenue minus expenses, not liabilities, but revenues minus expenses. And so when you're leasing, they're taking that to the next level. How are you expected to perform over the next 3 years? That's projections a lot of times that people don't think about. Setting budgets, setting parameters for yourself as an entrepreneur. I always tell people, get what you need when you're starting. Get some of the things you don't need, like you said, a line of credit, while you're still working your W-2 job. Because now you can cash flow because now you show them that I have a source of income. If you quit your job and the business hasn't made any money, no one is really going to lend to you because you don't have any income. How is the business going to survive if you haven't made any money? Then you're waiting until you have a tax return to show, hey, the business did make some money. And then the business may not cash flow because it's a new business. So those kind of things you want to have in place. If you know that you have $2,000 in expenditures going out every month, you're going to budget for that. Or if you know for the first 12 months, I am going to run out $24,000 a year. You know that you need to have at least 24,000 in reserve to cover that. Then as you start making money, it will offset some of that and avoid you having to tap into your reserves. But a lot of times people don't want to forecast, or they don't want to set those goals, or they don't want to hear, I'm not quite ready to start this business. I don't have enough to invest in this business, or credit or financials. My documents are not in order to be able to get what I need from this business. So all of these things play into that equation um, of business. So I guess, like I said, kind of paying yourself is key. So when you're starting out, remember, find a way to pay yourself. If you're not even doing payroll yet, get your old-fashioned checkbook. At the end of the month, write a check that says wages. Rosalind Brown, $500, until she can get a system. But every month she's going to expect it and then say, hey, I want to do things right way. Because at the end of the day, she's not getting a 941, and your 941 is what you get at the end of the year, that details how much earnings that each wage earner, each employee, W-2 under your company made. Like now everyone is talking about the employee retention credit. But if you had 1099s, you didn't get it. You had to have employees, and you had to keep their jobs through COVID. So that's something you want to keep in mind. And when they're asking for 941s, you can be your 941. You can be that employee of your company. So that's something to kind of think about. Um, the other thing that I think about with taxes, like you said, with the new businesses, depreciation, depreciation. I get a lot of business from other tax accountants, because 98% of my portfolio is business. And so if you're, and coming from a business banking background, you understand the importance of depreciation. And so for your average tax accountant that's doing individual, it's more data entry, things of that nature. But when you start getting into understanding business, depreciation matters. And depreciation matters because it's not a real cost to a business. Meaning, at the end of the day, you remember we talked about net income and net loss. If this business took a loss for $10,000 and they had depreciable assets, which I'm going to talk about in a second, of 30,000, that business is profitable 20,000, because that depreciation is back in, because it's not a real cost. So assets can be depreciated. What are assets? Vehicles. Cash is an asset, but it can't be depreciated. Vehicles, equipment, land, all of those things are depreciable assets. So, for example, it wasn't a 6,000 pound vehicle that you bought, but you bought a truck that you paid $40,000 for. And you bought this truck that you, like I said, you paid 40,000, because when you think about depreciable assets from a business, in a business, you're not concerned with what it's worth. You're only concerned with what you paid for it. So that's the first thing. So if you bought something, it's worth 10,000, you don't care. I mean, you care, but you don't care. But you bought it for 40,000, and you said, "Well, I bought this car for $40,000. How much more did you put into it? You put $5,000 into it for here. You put another five. So now this total cost for this vehicle is $50,000." And you've decided, I'm going to say the useful life. The useful life means, how long is this vehicle going to be in use? You have decided this vehicle is going to be in use for 5 years, and you want to depreciate it over 5 years. So if you take that 50,000, think about what that depreciation costs. You have $10,000 in depreciation that's going to go back to your books. That will make you profitable. You have 10,000 that's going to that you can write off of your taxes. So it's going to lower your tax liability in itself, just as wages would. As I talked earlier, wages and even contract labor lowers your tax liabilities, because anything that you do for the business is tax deductible. So that depreciation is so key, because think about it. Rosalind had to buy 2 vehicles this year that total 100,000, and she says, "Well, I'm okay tax wise. Depreciate them for 5 years. That's $25,000 that's coming off of her tax liability in depreciation." Now, The other thing she's told me, well, I have this vehicle that I've been driving. How does that go into play? And I said, is this the vehicle you drive back and forth to the office? Yes. Now we can utilize her mileage on that. As we know in 2023, the standard mileage rate for business owners went to 65.5 cents. So now she's driving this vehicle and she's drove 10,000 miles, just 10,000 miles. Think about what that mileage deduction is going to be on that. So now she has a depreciation for the two new vehicles, and she has the mileage on the vehicle that she's already been using on a daily basis. So now she has 6,500 that she's writing off plus the 25,000 legitimate costs that are needed for her business that she is writing off. Because what happens when you start making money, this is what people don't realize. That business start making money and your expenses get small, that tax liability gets higher. That's why you see business owners at a certain time start buying things because they need the write-offs. They would rather invest back in their business versus paying the IRS.
Now, this is a good question. Someone says she is a 1099 and
Mhm.
she's trying to figure out some of the best ways to lower her personal tax burden for the upcoming tax year. So, of course, she's not a W 2 employee, so she has a few more liberties to do a few more things too.
Yes. So if you're a 1099, the thing is that I'm going to segue into mileage. For one, mileage is your biggest cost that we talked about. So you want to make sure you're utilizing some type of mileage tracker. Stride and Mile IQ are two mileage trackers that are automatic that I like. They automatically track the miles. You can swipe to the left, swipe to the right if it's business or personal. The other thing that you have to think about, you said I'm a 1099. You are a business. Whether you give it a formal name, you are filing a Schedule C return just as an LLC would, just as a sole proprietor would. So now you have to think like an entrepreneur and a business owner. I am a 1099. Did I use anything for advertising? Yes, I had to provide business cards. Oh, I had to use travel. I had to go to this conference. So you're thinking about everything where you travel. And I know when it comes to the rules of the IRS, when it comes to travel, the rules are if you traveled somewhere and that trip was beneficial to your business, whether it was continuing education or something to add value to the business, that total trip is tax deductible. If it was a piece of the trip where you went to one piece and then you went on to somewhere else, then they would say a piece of that trip is tax deductible. So the rule of thumb, even when it comes to food, if there's a business conversation that is had, those are the things you want to think about. Leaving the 2021, 2022 tax year, meals were 100% deductible. 2022, 2023, they won't be. But 2022, you still had the advantage of meals. Um, you have your travel, you have all the supplies, everything else. If you've paid other contractors, your contractor wages, contractors, contract labor, and wages are your two biggest deductions. All deductions don't carry the same weight. You think they do, they don't. Those two, you will see the difference in the amount of tax you have to pay when you have those. Um, the other thing to think about is SEP IRAs. I speak on them all the time because to me, that's that entry level investing where you're getting people comfortable with setting aside retirement funds as an entrepreneur, and it offsets your tax liability as well. You have until April 15th of that next tax year to pay into the previous tax year. So you have until April 15th, 2023 to contribute into a 2022 tax year um, retirement account to offset those taxes. So it's a lot of little things you can think about to help you. And that's why another thing that you think about, what a lot of entrepreneurs don't think about, if you have a tax accountant or a CPA, you want to have someone that can do tax strategy with you, not someone that just simply can do a transaction. Tax strategy is what we're doing now. The planning. Hey, I'm looking to buy a vehicle. I'm looking to buy a piece of land. Hey, I paid too much last year. What should I do from as far as retirement? Once I've done basic, then I'm going to connect you with someone like Rosalind. This is who you need to talk to. And if Rosalind can't help you, she's going to direct you where you need to go because Rosalind's been doing investments ever. So he's going to
I'm
direct
still
you.
young.
That's what I said. The fact that you're so young and you ever she came out the womb. That was her thing. So, and you have to realize you didn't have, and you still don't have Black women that are talking the talk when it comes to wealth and investing. That's far and few between. Just even when I was on the business side, you didn't have Black women business commercial bankers having conversations about starting, growing, and developing your business. It just wasn't there. So, creating this, having these conversations help us to strategize and plan for a better year. Can't necessarily go back, but you can set the tone for this year to be better prepared as it relates to taxes. What are some other? Did they have any other things before I go into my other ones that they wanted to discuss?
No, not yet. But definitely drop your questions in if you have some additional questions too.
Um, the other thing to think about is sales tax. Like I said, I've been getting a lot of things, inquiries when it comes to sales tax. And I know particularly down in Georgia, they have been on it with people. They have been placing tax liens and things like that because you don't think about as a retailer about sales tax. You know about it, but actually filing and paying sales tax and understanding where you're located determines the sales tax that you're going to charge. So those kind of things, a lot of times as entrepreneurs, you don't think about. You don't think about, oh, I've just bought these goods, I'm going to resell it. Sales tax. If you're charging sales tax, you want to make sure you are paying your particular state entity their sales tax on a consistent basis. Or the thing is, once you start, you got to continue because they will place liens on your accounts. They will place tax liens that can prevent you from doing a lot of different things. So making sure that sales tax is taken care of is critical for retail businesses or anyone that's distributing and wholesaling as well.
Now, especially, I know some people are like, oh, I don't know if I need to pay sales tax for. So, if you're a beautician or you do nails or you bake cakes, do they pay sales
Mhm.
tax?
Any service is not sales tax, just what you're selling. So, like you said, if you're a nail technician, you're doing the service, no. But if you selling press-on nails, that you're ideally yes, because you are selling a product that you want to charge taxes, that you're charging taxes on, they want their money as it relates to taxes as well. So those things you want to think about. The big one that people don't want to talk about, particularly people of color, particularly my Black people, is bookkeeping. We feel that this is what I get with that. You asked me about trends and myths. Oh, I got QuickBooks because somebody told you to get QuickBooks. I said, well, when's the last time you updated QuickBooks? I got QuickBooks. And they'll say, well, I didn't update it because I don't know what to do. I said, so you basically are paying a fee for QuickBooks because someone told you you can do it yourself. And I will tell you this, you can, but it's not. My dad used to say this, it's not you, it's not that you're paying someone to do something that you can't do. Oftentimes it's time. So you have to think about it. Am I you as a business owner? Is this my expertise? Am I utilizing my time on my giftings? So a lot of times when it comes to bookkeeping, why bookkeeping is so imperative and useful for your business is this. Bookkeeping is going to classify. Bookkeeping is telling you every month you're reconciling your books, is helping you to understand what place everything goes. At the end of the year, a lot of times after doing taxes, if a person is not bookkeeping, if they're not given a pile of receipts, what they're going to do is give you some bank statements. What they're going to do is say, I had this Excel spreadsheet. And then you're going to look and you're going to say, what happened on January 2nd? This said this was $2,000. They're going to say, I don't know. Let's see what the bank statement is saying. The bank statement is very general, just say a transaction. So now you're scared to account for it because you don't know what it is. And you're like, oh my gosh, I don't want to get audited. Just forget it. So you end up missing out on deductions and transactions because of this fear, because you can't remember what happened in January. So you got a bank statement, but you're like, I don't know what that is. Bookkeeping also helps you to generate those reports that you need when you're getting lending products. Your profit and loss statement, your balance sheet. Your balance sheet is your assets, your liabilities, and your owner's equity. Your balance sheet tells how this company is performing year over year. Then your statement of cash flow. How well is the business managing this cash flow? Those are documents when you successfully bookkeep that if you have a bookkeeper, you should be getting on at least a quarterly basis. These are the documents that you need to share with your team. These are the documents that you'll need when you're applying for lending products. So bookkeeping helps you to stay organized. It helps to provide a good financial picture of where that business is on a consistent basis. Because if you're doing what you're doing, even if you have QuickBooks, you may, oh, I'm putting it here, general business expense. I see it. And I'll have somebody have $50,000 in general business expense. And I said, again, your bookkeeping to help you with tax preparation. So where on that Schedule C do you see general business expenses? Nowhere. So then you have to go through these general business expenses and allocate them somewhere. Or say in a situation you have a bookkeep and you are truly self-employed and you're looking to do something. Now you have to go to a CPA and say, I need an audited personal financial statement. I need an audited statement where they're going through all your statements. They're going through every transaction. And guess how much they're charging? Anywhere from $5,000 to $8,000. You could have paid for bookkeeping. And had bookkeeping and payroll would have paid for itself with that, and you would have had a financially sound business. So as you're starting out, do it the right way. Set budgets for bookkeeping, set budgets for paying yourself, set budgets for marketing. All of these things that you need to operate your business. Marketing, your marketing budget is usually 10% of your annual sales because it's the driving force to get people to see your business. So, yeah.
And that's annual gross sales, or is that?
Annual gross sales, ideally, IRS no standards of marketing is going to be 10% of what you actually bring in.
And see, that's a good thing, especially for people who are just getting started. They don't have sales to go by, but
Mm-hmm.
especially if they can estimate where their sales may be and say, I plan to make $10,000 this year.
Like you said, you put it out there, write the vision, make it plain. Once you put it in the atmosphere, now you're going to hold yourself accountable. You're going to hold yourself to this. I have to make $10,000 this year because I said it.
Put it out there. I told the world. I was,
Yes. Yes, I totally agree. So, like I said, this year too, as y'all are preparing, remember too, the other thing I get, which is not on my agenda, is S corps. People always want to know the difference between an S corp and LLC. And I always tell you this: if you're in a position where there are multiple partners, multiple owners, or where the business is really starting to make money, you want to think about an S corp. Here's the caveat with the S corp: you can set an S corp up through your Secretary of State, but you're not officially an S corp until you file with the IRS 4583, I think it is, to say I am an S corp. Otherwise, you will have an S corp and you will be filing a Schedule C tax return. You'll be filing with your 1040. Once you become an S corp, your tax filing date changes. S corp files on March 15th. S corp does not pay taxes. S corp files whatever's left. You get K1s. That K1 has to be given to the owner or the owners, and then they file that on their 1040 personal tax return by April 15th. That is why you have that cutoff of March 15th. Nonprofits, you have until May 15th to file your tax return, and those tax returns are 990s if you are a nonprofit organization. The thing to remember with nonprofit organizations, you do not own the nonprofit, the board does. But nonprofits have until May 15th to file their business returns. So just kind of thinking, but the major difference again with the LLC and the S corp, LLCs pass through income. So whatever's left passes on to the owner, and they file on their return. S corp does not pay taxes. You get a schedule. Whatever's left passes on, and you file it on your taxes.
I think that's a hard part for a lot of business owners, especially
Mm-hmm.
as they're getting started. They don't know, is it one versus the other? How do you know if you should be C corp, S corp, sole proprietor? How do you make that determination in terms of what makes the most sense?
Well, I'm never a proponent of just being a sole proprietor because you have no protection. The main difference, LLCs, as most people know, are fairly new forms. LLCs are forms of corporation. They are fairly new because before you had corporations and you had a sole proprietor. And your sole proprietor is your DBA, doing business as usually one person, or it may be a husband and wife that shared the same name. That was the only caveat. With a sole proprietor, if that business owner passes away, that sole proprietorship is gone. You cannot pass down a sole proprietor. The thing with a sole proprietorship is no protection, meaning if you have a business and it's in the name of Ashley McCoy, doing business as Ashley McCoy, and I am running this business out of my home or wherever I'm running this business out of, if something happens, they can sue and get everything that I own because I have no protection. I want all the smoke. I have all the liability on me. As an LLC, if I'm Ashley McCoy doing business as Ashley the business expert, if I am in a situation where I'm sued, they only can sue what and get what the business actually owns when they're suing that particular business. So it gives you the taxation of an LLC. I mean, the taxation of a sole proprietorship LLC does, but it gives you the protection of a corporation where the liability falls on the corporation itself. So those are two biggest things when it comes from a sole proprietorship to an LLC. You want the protection. And now it has become hard to open business accounts as a sole proprietor. And you want to open your business account. You want to open your business account so that you're not commingling funds. And at the end of the day, if you have a business transaction, even if you forgot and you ever got audited, at least you can pull that statement and say, this was a business transaction, came from a business account. It's hard for them to say, well, it wasn't because it has the business listed. And then you can find your receipts for things and you say, oh, I remember what it was. That's why they typically ask for receipts because you're looking at that bank statement and you don't remember what transaction was. Or you got all of these transactions that say debit, debit, debit. So that's the thing that you want to make sure you have in place the business checking account, which helps you to that first step to acquiring and building wealth for that particular business. And then, like I said, with S corp, you equate the S corp when you're growing. You also equate the S corp with typically in the past, people with LLCs didn't do payroll. Usually, when you're transitioning, you're a bigger company, you would say, "Oh, now I have employees. I'm going to pay payroll." But you can have that same payroll with LLCs. S corp, like I said, you're dealing with multiple owners, and the business is starting to grow. So some of the tax liability is larger.
I think that's a really good explanation in terms of where you are
Mm-hmm.
and kind of where you're going to. So that's some good information for those people who are like, okay, I'm at a LLC, or maybe they just,
And you can always transition if you need to. Again, the thing is what you have to consider. If you go from an LLC to Inc., it's two different entities. So a lot of times they'll let you change the name, but if you're changing the entities, sometimes that's hard going from LLC to Inc. But you just keep a paper trail because now you got to realize that life of the LLC is no longer. You're not filing Schedule C anymore. So now you have to say, well, here's where we started, we transitioned, we grew to this point.
I
And like
think
I
that's
always
really good to
say,
know.
you think about S corp, your smaller corporations, your C corps are you like your WalMarts and your larger corporations, things of that nature. But either way, you're dealing with shares, you're dealing with stocks, even though it may be you and someone else. How many shares do they actually own of this business?
Everybody gonna get to the Walmart status, so you gotta you gotta think with the vision
Or Target.
for today.
You know, if they want to, and some people don't want to. They don't want the headache. Mm-hmm. They don't want the headache. Do we have any more tax questions as we are in the thick of tax season?
So one person says that they're a W two as well as 1099. Are there some things to think about in terms of what they can do to minimize their tax liability as a W two employee? But then since they also have the benefit of being a 1099, then they might be able to go above and beyond what they can do on the W two side.
I always say back to strategy. So if you made 100,000 on a W-2 and that business took a loss of 50,000, then you know your taxable income is now 50,000 if you're LLC, because the W-2 income, you remember LLC is a pass through. So it's going to automatically lower your tax liability, but you're thinking about what you're trying to do. If you know you're looking to buy a house this year, that $50,000 loss could help hurt you. If you say, hey, I'm good for the next 2 years, then you can claim all your deductions, and then the $50,000 may not hurt you. But it's always planning, because in the next year you can say, well, 2025 I'm looking to purchase. Then 2022, 50,000. Then 2023 you're preparing, you're doing some payroll, doing some things like that, so that loss becomes an increase. So now versus you're losing 50, you've made 10. So now you've made 110. So it all goes into that. If you're just starting, of course, some of your liabilities are going and your expenses are going to be higher because you're trying to get acclimated to running this business. As you grow, you may still be on that budget that you're used to. So you may have net income versus a net loss that year.
And then what are I love when you brought up, because a bunch of people, especially if you're watching old TikToks, they know about how meals are 100% deductible, and that has changed for 2023. What are some other changes that people should be aware of? That don't get caught up thinking.
Oh, this is one thing I was saying across the board. If you have children, entrepreneur or not, the tax credit decreased from 3,600 to 2,000. So if you're used to getting a large sum back, those numbers have drastically decreased. So a lot of the protection and rebates that were there due to COVID are no longer. There was a COVID relief one from 2021 that helped people from a business standpoint, because I know y'all heard last year people say, oh, this person got $30,000, $40,000 back. Yeah, because it was some of that COVID relief that's gone. What has helped for business owners going into this year, of course, last year the standard mileage rate mid-year increased to 62.5 cents. So half of the year, I think I want to say was at 60, and the other half 62.5. This year, it is at 65.5 cents per mile. So for 2023, you're getting that boost in mileage. But as far as your other deductions, it's just some of your credits that you had from COVID have gone away. So that's why you want to, what still wins, those education expenses, investing in your retirement, those expenses still are strong. On stateside, investing in those 529 plans, those contributions are tax deductible. So all of those still help from a taxation standpoint. But it's really about planning, ideally knowing what you're planning to do. Because right now, if you are filing taxes, you should plan last year for 2022 taxes. And if you say I'm good, now you're starting to plan for 2023 to ensure going into 2024 you look really good on paper because of where you're trying to go. And then the other thing that I'm thinking about, if you are an entrepreneur, you have your schedule, even if you're LLC, Schedule C, your 1040. Personal lenders look for something totally different from business lenders. Personal lenders look at the straight bottom line of a Schedule C. They look at net income or net loss. If the net loss is, if you have a net loss, they're saying we can't do anything for you. There are some lenders that back in some depreciation and some mileage from the business. There's some lenders that say if you've been in business for a while, we'll look at 1 year return. On the business side, they always back in depreciation and interest. They look at a global cash flow. They look at how you and the company are both performing
I
to
love it. Yes,
determine.
this is a good question, and I mean, listen, I'm interested. No babies.
Yes.
But she tried to claim some pet expenses as service animals. She's a veteran. So she's like, hey, how can I get, my little fur baby?
It's nothing you really can do unless, again, you have structured yourself in some type of business capacity. Are you a dog walker? Are you doing something of that nature? So that's why you have a rapid increase of people that are entrepreneurs that are single, because they're like, hey, I, I am turning this hobby into a business and I'm going to get the benefits of it. I don't have any dependents, you know. I'm done with school. I'm not going back to school. I put as much as I could in my retirement. What else? What else can I do to offset that? I've paid these people $10,000 in federal taxes, and I still have a high tax bill. That's why people start going to say, "Let me turn what I love to do into a business," because it does help to offset um, a lot of tax liabilities, and then it helps you from a standpoint of doing when you're paying out wages and things like that. It balances out. So that's the first thing. I'll get people to ask me, well, what should I do? I said, do you have a business? I'm thinking about it. I said, start one. You're not going back to school. If you don't have a ton of deductions, if you're an individual, think about it. Your standard deduction is 12,500. Yes, if you have a mortgage and you donate, you can exceed that. If you have file a household, it's 18,000. It's a little bit harder to get up to that 18,000. And then if you're married, filing joint, and you have no dependents, that's 24,000. It's a little harder to get up there. But as an individual that does not have any children, donate, donate, donate. Donate, pay your church tithes, have your mortgage interest, because those things are going to all help offset your tax liability. Because think about it, you made 100,000. Standard tax deduction is 12,500. You subtract that, you're left with what, 87,500 that you got to pay taxes on. Yeah, so now you got 87,000 income and you pay 4,000. Say, I paid enough taxes. They say no. Go back to the IRS scale. If you made 87,000, you're supposed to pay, say, 7,000. Now you pay back 3. But if you have 100,000 and you've itemized because you've donated, you volunteered, you have mortgage interest, and now that standard deduction becomes an itemized deduction of 30,000. Now you're at 70,000 taxable income. So those things on the individual side, if you don't have a business, help to offset. When you don't donate, get your receipts. You pay tithes. You got interest on your house. You pay taxes. You paid these medical bills. Now you can itemize, because if you don't have enough to itemize, you can't write it off.
What are some things that people might forget to itemize? So, are there things that you're like, you didn't think about that, or you didn't? I mean, mileage might be one that people
My,
just don't.
volunteer miles is huge. That you went and volunteered somewhere. Of course, we know our medical bills. When you add postage, tax preparation fees. If you're an individual, you can itemize that. Cash donations. Another one, you have a nonprofit and you've donated to your nonprofit organization. Making sure you track those. Again, like I said, church tie interest on your personal residence. Because if you have investment property, you're looking at a Schedule E. So that's something different. But just kind of those things. Office, if you are employed, but you're not a business, some of the office related expenses that you've paid to operate for this company at your home. Like during COVID, when people working from home and you bought a desk and things like that, those expenses, because you're not writing them off on the business side, you're writing them off on the personal side.
And that's a good thing, because I know it was a big thing about, could you write off a part of your rent or your mortgage? And they were like, no. But
You
it's
can
good
write
to
off
know
the
you.
things if it was job, like they said, if it's job related and you're not a business, because you can't double dip. So if you write it, just like with mortgage interest, if you write it off on a business, you can't write it off on a person.
So that's good stuff to know. Now, if a business is just getting started, so 2023 is their year, so they
Yes,
are getting things in
this is
place,
your year.
what are the things that they need to do today? So I know you talked about people like, I'm just going to get QuickBooks. What are the things that they can do to say, all right, I'm going to set this thing up right. I'm going to make sure I know my taxes. I'm going to make sure I know what I need to buy, what I need to track, all of those kind of things.
Hire a consultant. First thing I would tell you is hire a business consultant. Do your research like you would anyone else. Anyone that wants you to pay right away probably is just a little money hungry. But kind of find you a business consultant, and the business consultant will kind of help. And then you kind of build out your team. Business consultant usually may tell you to consult an attorney or your CPA. Typically, the reason why tax accountants can be beneficial is usually if you're not $1 million business or a certain amount, CPAs don't necessarily have the appetite for it. But having your team, having a good bank, interviewing the banks. So if you did not hire a business consultant and you decided I'm setting up an LLC, my thing would be set up your LLC first, get your tax ID number second, go to your bank, interview them. Hey, this is my type of business. Do you have the appetite for them? Because you want a bank you can grow with at that moment. Set up your business checking account. That should be immediate. Once you set up this business checking account, you download these mileage logs, these mileage apps, because now you're going to Office Depot, you're going these places, you're getting signage. So you're downloading your mileage logs. Then I always call it the poor man's bookkeeping. You did everything. You haven't set up QuickBooks, but you got receipts. Get your email. You set this Gmail up. Take pictures of these. Write on these receipts. Take pictures of them. Get your folder in Gmail and say business expenses. You've already wrote on the receipts because these receipts are going to fade, but at least you know what you did with that receipt and you wrote on that. Every month, try to review that. Try to make sure you kind of classify them. So take that, then put it into some type of put it in some type of Excel spreadsheet or some type of spreadsheets through Google Docs. Then at that point, because you're just getting started, you say, okay, I got my business checking. Another thing that a lot of people don't want to talk about that I'm an advocate for, business insurance. Even as a tax and consulting business, I pay business insurance. I have business liability insurance. I always say having business insurance is advantageous for you and your industry. Figure how much is general business liability insurance may run you $300-400 a year, but it's something that's good to have. You already have it in place. Um, Another thing, your subscription. Go through your Facebook, your Instagram. Find these groups that you can be a part of for free that can help you grow your network. Also, being able to set up social media. Social media platforms are free. Having those platforms, if you are not ready to set up a website and you just bought the domain name, please don't put that on your social media until you have something. Because the worst thing is clicking there's nothing there. But start with the things that you can do free. Your social media, your presence, and once you start social media, be consistent as you can. Put some type of content that's related to your business. But those are the things I would do initially starting a business if you're not going to go the consultant route. And then just kind of you at that point keeping track of every dollar that you spend and every dollar that you're bringing in. So even if you say, well, I don't have money coming in, still make transactions out of your business account. You want to track your activity. So even if you have to put money to your business, that is called capital. That is owner's equity. You're investing into this business.
This is a good question. I think this is a good formation type question.
Mm-hmm.
It says, I have an EIN and
Yes.
filing the LLC this month. Will she need a separate EIN because the name will be different?
So you would see what I just said before. Set up the LLC, then get the EIN number. Because what happens, you go out there and you love this. My company name is very long, and it's long because I was set on the brand new you, but everybody had the brand new you. So my company name is technically the brand new you, a comprehensive business resource company, which is my slogan that's fit into my name, but it's short for the brand new you. But the tax ID number is set up for my loan company name. But you do that because you can go into the Secretary of State and then you don't have the name that you want. Set it up first, because technically, if your EIN number is different from that business or the next code, even what you're doing is different, it's not that entity. You want to write to the IRS and say, please dissolve this EIN number. I am no longer using it. You don't have to do that. It will just be out there, but I will write and say this one is no longer active. And then that way they know, because you don't want it popping up later. So if you have a new business entity, you want a new EIN, and just write them and tell them that you're no longer using that previous one, or it was set up in error.
So that's good to know. It's those steps. You can't do two before you do one.
Mm-hmm.
So I think that's a really good point, and especially even for just names. Sometimes your great idea, somebody else's thing might be great idea,
Yes.
and it might not
That's
even
what
be
I
your
tell
type
people.
of business.
Do it first, like, or even with your Gmail. Don't do Gmail, then it's off. Set up the entity. Once that name is taken, then go and do the EIN number, then get the email, because that way, if everything, it's all about branding. Everything works with that particular brand, down to your color schemes.
I think that's a really good point. Just overall, as you start to think about, the first step, second step, third step.
Mm-hmm.
We all have great names, and sometimes you'd be like, I heard of that business before. And so as you start to put the official things in place, even before you go on social media, you might actually register your name, and all of a sudden somebody on social media using it. And I've seen people be like, I'm gonna get your stuff taken down.
That's true. No, it's true, because through my nonprofit we have agriculture networks, but there's an agriculture network, and it seemed like it didn't pop up until after agriculture networks with the S popped up. But it is what it is. So yeah, very similar, but yeah, because they actually could have had the domain name reserved, which was why I couldn't get it. But they actually set up a social media after the fact. Yeah. It is what it is. It's
I mean,
nothing,
I think
nothing new
I think
under
it
the
comes down
sun.
to it being so easy. Like now,
Mm-hmm.
literally, I can sit here after we, get up here and be like, boom, I got like 18 names.
Yeah, and you go to register domain name for all of them, and because you want them all, and there's nothing new under the sun.
And so it's definitely a tad bit harder. And like you said, some of the longer names might make sense. At least just to do like some formation and get
Mm-hmm.
those things in place.
Yes.
So this was definitely good information. We got somebody who need to do some switching around with some stuff and some planning for the new year, and somebody gonna figure out a way, you know pet dog sit a few dogs, and then you can
Yeah.
purchase some
Something.
extra toys or something.
Or helping some other people that have service animals, maybe doing some consulting, helping them to where the resources on where to get that to make those get those animals to become service animals and things like that. So yeah,
So that's all, and that's a whole business. Then you bring your dog along and be
yeah,
like, look
yeah.
at
I always believe this, that as particularly as we know, the fastest growing demographic of entrepreneurs is Black women. But I always believe that if we are not entrepreneurs, have an entrepreneurial spirit, meaning invest in someone else's business, help them to start that business in that way, or see the vision in them, even if you are not ready to lead a company today. If you have the entrepreneur spirit, the cycle keeps going and we keep progressing. We keep more of our dollars within our communities, and we build infrastructure around having our partners in place. Because Rosalind, know you go to banks, when she was just out of college, it was hard calling on other businesses, because guess what? They had their team in place. They had their banker. They had their investment person. They had their tax person. They had their insurance person. But that they were paying. And
it.
they work together. But we have to get comfortable and understand that we can't do it all. And it's okay to have partners. It's okay to have people that we pay, because it keeps us going and keep us evolving. That way we we operate in our giftings. So
Now, if someone wants to work with you, so we had a few people who got some questions, they trying to
mhm.
put their stuff in place. How did they get in contact with you?
Well, you can get in contact with me. My email is long, but it's info at thebrandnewyoucompany.com. And the Brand New You Company is spelled out. And speaking of um, companies, as you all know, y'all will be the first to know I am going through a rebranding because we are focusing in on going forward just nonprofit setup, bookkeeping, and taxes. So as I move along on this tax journey, so we will be branding, rebranding, but info we will always be the Brand New You. We'll always be the TVNY. But info at the brand new you company.com. See, starting out when I started back in 2015, you don't think about that. Now it doesn't matter because people copy and paste your email. But at the same time, yes, we're info at the brand new you company.com, or we can be reached at 404-618-2724. And the website is thebrandnewyoucompany.com. So you can always, our first consultation is always free. You can always book your virtual consultation on the brandnewyoucompany.com website.
And then are there, because you're in Atlanta, and
Mhm.
so are you just working with people in Georgia? Are you working with people all over? Do you have any limits?
No, we have people everywhere. We can do taxes everywhere. We have clients that we are entertaining in Massachusetts. We have clients in New York. We have clients everywhere. Clients in Florida. We have clients everywhere. So, I mean, technology makes it happen. And the goal is to actually get out there and visit at least once a year. But we have clients everywhere. We have, because operating your business, what we do, we take pride in educating. So we take an educator's approach to make sure you know what we know. We may be the ones doing it for you, but you won't leave from that experience uneducated about your business. But no, we work with people everywhere.
I love it. Now, last question. So, of
Mm-hmm.
course, we got some other folks. And Gentle Yoga for Everyone says networking with other Black entrepreneurs is so important. Yes,
Yes,
because we can do so much if we just come
yes.
together and share our resources and knowledge. So, that's a great point to make. But my last question, what does financial independence look like and feel like to you?
So I've been on this journey for a couple of years. Um, as you know, I have a son that will be graduating from Georgia Tech in May. So for me, when I was at banking with Rosalind, I figured out my purpose. I knew my purpose was to educate. And it took me so long to, leave the rat race of banking because of money. I'm being honest. But you don't realize how much your purpose and your giftings will make room for you. So for me, I always want to continue to teach in some kind of capacity. Um, as Raza knows, the business will be continue to be a bookkeeping and CPA firm is where we're going and consulting for our communities. We will be strategically placed in communities that look like us and advocate for people that look like us for from financial freedom, being able to teach and being able to operate this business and leave this legacy to another young entrepreneur, because in that CPA space, in that CFO space, you find fewer Black women CPAs and that can serve in that CFO capacity. So for me, being able to teach and fully run the Brand New You accounting and tax associates, which we will be branded too. So being able to do that and continue to invest in the community through our training, entrepreneur leadership training, our agriculture initiatives, that's financial freedom for me. But continue to have the resources to be able to give back. Being able to help an entrepreneur that says, hey, I can't pay your full fee. And I'm like, it's okay. We'll take you on our wings because in 6 months you will be able to. So just continue. And our model is based on that. Our financial model now, we provide financially feasible solutions because I know the challenges that we face as Black owned businesses. We don't want to pay because we say, I ain't got the money. I can do it myself. So starting out and helping them to understand this is why this is essential and being able to say, okay, you may not be able to pay full price, but you'll send me a referral that can. So it always continues to evolve and understanding people budgets and understanding how we can help you to get to the next level. So all that for me is so much bigger than me. And that's what I realize is so much bigger than just Ashley, and it's so much bigger than just the brand new you, but it's really about, for me, living the purpose that God has for me to be able to help other entrepreneurs to continue to start and develop and grow their businesses the right way. So if I can turn around and we're where I'm in DC speaking and I'm somewhere else speaking, and that's financial freedom to me.
I love it. Everybody, we're gonna get there. Y'all
Yes,
gonna
we
call
will.
Ashley. I dropped her email, website, and phone number in the chat as well, so you can go back and refer to that. And hopefully, y'all gonna get your business set up right. And if you are in growth mode, you're gonna get your next stage of your business set up right too. So be sure to create your team, because your team is what's gonna help you go from point A to point B and on and
Mhm.
on and on. So
Yes.
thank you so much, Ashley, for being with us today. Thank you, everyone who joined us tonight. And until next time, have a good night, y'all.
Bye.